Hey folks, so we ran into a bit of a technical difficulty with today's episode recording. The video file got corrupted from the SD card inside the camera, so we're only going to have the thumbnail here on YouTube. If you are listening or choose to listen to this podcast on our audio platforms like Spotify and Apple Podcasts, everything will be perfectly normal as if nothing ever happened. Links to those things will be in the description below. Thank you and enjoy the podcast.
GameStop stock was skyrocketing for quite some time, and then Robinhood came to steal from the poor and give back to the rich. But that's not all in the Tech Summit podcast for today, episode number 23. I'm Francisco.
I'm Chris.
And welcome in to the stock episode.
The stock episode. Of course, if you are watching on YouTube, our social media stuff will be down here at the bottom of the video.
And if you're listening on other platforms, do remember that we're going to have all of this information and links to other social media right in the description of either of the respective apps that you're using.
Yes, of course. Now, let's get started. This is going to be a little bit of a different episode, I suppose. As you mentioned, this is kind of the stock episode, I suppose.
Yeah.
Yeah.
I'm waiting on you here because I'm very much looking forward to hearing everything that you have to say. So this man right here, this man invested into GameStop. Well, not just GameStop, into a couple of other businesses, and a lot has happened over the course of the week to either discourage a lot of people or encourage some people to take further action. I want to hear your side. I want to know how you're thinking about all of this, but most importantly, just the whole story.
Okay, so before we start anything off, we must make a very clear note here. We are not financial advisors.
No.
We are not financial experts, and we are not trying to advise or recommend anyone do anything necessarily. We are people who may have invested in various stocks, people who may like the stock, as they would say. We like the stock, or I like the stock, I guess.
Though the reason why we're also discussing this on the podcast tonight is because it has to do with a piece of software. It has to do with Robinhood.
Yes.
Which is owned by who exactly? I kind of forgot.
Yeah, we're going to talk about that a little bit. But yeah, I just want to put that out there first because there are certain people out there who are trying to accuse certain groups of manipulating the market by telling people to buy or sell certain stocks or whatever it may be. And, you know, we can go into like what's going on there, and all that stuff. But yes, this is in fact the Tech Summit podcast, not the Finance Summit podcast. And the big reason why we're going to be talking about this is twofold. One, a lot of this is centering around Robinhood, which is a piece of software. And two, a lot of this is centering specifically around GameStop, which is tech.
Yes.
A tech retailer. Obviously more of a video game retailer, but as we're going to get into a little bit later, they are moving more and more into the tech fields that Tech Summit here likes to talk about.
Yes. And that's going to be pretty cool.
Yes. So elementary level summary of what's going on here, because even I barely understand this. A lot of people who are actually involved do not understand this. But there is a technique that is used in the stock market, or used by the bigger people in the stock market, called shorting.
Okay.
Now, to short something is to bet against it. Namely, that what they will do in this as a practical use is that they will buy a stock of something, say GameStop.
I think I actually said GameStop around the start, so
anyway,
I'll let you do it.
Whatever it is. Yeah, we're going to use GameStop as an example here. They will buy GameStop stock, immediately sell it, and then place a bet that it's going to go lower. Mm-hmm. And so then when it goes lower and that call expires, they will get the stock back from them. They'll buy the stock back at that cheaper price and return it to someone else, return it to the original investor at that original price, and they will get to pocket all the profits.
Okay.
That is stock shorting.
Right.
Now, we can discuss the moral ambiguity about that in many ways. Personally, I will say, this is me personally, and a lot of other people also believe that this should be illegal and it should not be allowed because you are literally betting on a company failing in this case. Like in this instance, a lot of these big investors who are shorting GameStop are betting on GameStop failing and therefore thousands of people losing their jobs. That's not really cool.
I see that.
And they're profiting off that.
Right.
Now, what's happening here is Wall Street Bets, a subreddit which had been relatively popular beforehand, but was really known for a lot of wild and crazy bets all over the place, a lot of crazy investments that don't make a lot of sound or reason, which has, like, for every one success story, like 100 failures where people lose all of their money.
I see.
And they started to look at GameStop and they started to invest in GameStop, including a couple of people, like namely Deep Effing Value, or I believe his YouTube name is, I believe it's Roaring Kitty, who had put in $58,000 into GameStop stocks as well as call options last year, back when it was a lot cheaper. It was like $4 or so. And, you know, because everyone's buying in on GameStop, you know, it starts to go against the shorts that a lot of these people have.
Right.
And as a result, you had there was a weird conglomerate of a lot of different things that happened. One of the biggest catalysts was this one particular thing called Citron Research, I believe, who was this one investment company. It's really one guy who said GameStop is going to go under $20 and you're all a bunch of suckers, and I will explain 5 reasons why.
Okay.
In a live stream tomorrow at 11:30, you know, tomorrow in that time.
Yeah.
And then the time came, and he decided to postpone it because there were certain political events that were happening.
Right.
You know, an inauguration here in the U.S., inauguration. And he said, okay, we're going to postpone it, but tomorrow I'll tell you. And I'm still telling you guys you're all suckers. Mm-hmm. And then the day comes, the live stream happens. It was a lot of technical difficulties. He didn't really go too much into it. And so a lot of people are starting to wonder, why is this happening? It's because what he was essentially doing is he was trying to stow fear in people that it was going to go lower. And of course, if people are afraid that it's going to go lower, they're going to sell right now. And if everyone is selling right now, then the stock does go lower. Yeah. And of course, if it goes below $20, more than likely that guy had a short on that, he'd profit.
I see.
So you're trying to instill fears in that. And the same goes not just for him, but also for another hedge fund, Melvin Capital. Okay. Melvin Capital, which has a lot of money riding on shorts on GameStop failing and going lower. And of course, with the price going up and up and up and up because everyone's buying it. And not just that everyone's buying it, but they're also not selling it. You know, they're holding.
Diamond hands.
They the price goes higher and higher, and therefore Melvin Capital is going to lose more money as these calls, you know, come in. Right. You know, as it's time to pay the piper when it comes to these shorts. And that's also led to a bigger company, Citadel, as well as a couple other investment companies and hedge funds, including like Point72, which is owned by Steve Cohen, the new owner of the New York Mets, investing, I believe it was $2.1 billion in Melvin Capital as a bailout to ensure that they didn't fall completely under due to this stuff.
Okay.
So it's very clearly a case of like the bigger guys trying to push back against people, you know, the common person. Mm-hmm. And all of this culminates, there's a bunch of other factors that I'm not even mentioning here, but all of this culminates in Robinhood blatantly manipulating the market in that this past Thursday, I believe it was, Robinhood outright shut down the ability to buy stocks in GameStop, AMC, BlackBerry, Nokia, Naked, and a couple of other stocks that have been ridden by a lot of these people to go up and up and up.
Wait, like Naked Juice?
Yeah, I think so.
Okay.
I believe it is in fact Naked Juice. Yes.
Okay.
But honestly, the big holy trinity of sorts that everyone's really focusing on really comes down to GameStop, AMC, and BlackBerry.
I see.
And then maybe swap out BlackBerry with Nokia. Depends on what you want to do with it.
Yeah.
But like, the idea is that Robinhood prevented people from being able to buy stock. Like they specifically say in the bottom that you can only sell. You can liquidate your assets. You cannot purchase more of them. Which, of course, means that the value will tank because now nobody's buying it.
Did they mention why?
Huh? All they say is the validity of the market.
The validity of the market.
The market is very volatile, and to alleviate the risks, we are preventing buying.
That's quite vague.
It is extremely vague. Also pretty, honestly, kind of blatantly obvious to what they're trying to do here. You know, in the past, if someone was to make a huge giant bet on, say, Radio Shack, for example, like if they were to put $50,000 on Radio Shack stock skyrocketing, they would not be like, hey, man, this is pretty risky for your own good. We're not going to let you buy anymore. No, they just let that person fall to the wayside as Radio Shack is delisted.
Right.
You know, but now that something is going up, they're taking the risk and it's actually working out for them. They feel they need to cut them out to stop them from buying any more stock. So because no one can buy the stocks, you know, the value is going down.
Yeah.
And because the value is starting to go down, you have some people who are starting to panic sell. And because they're panic selling, it goes even further down, which means that GameStop stock, which at one point on Thursday was as high as $460-something, tanked down to $130. Really, really badly. And then, you know, it started to slowly rise up again. You know, that's the stuff. But
that's pretty much a whole quarter of what it was at. Exactly.
There were people who lost thousands of dollars. In the case of Deep F and Value, he lost, I think, $11 million because of that market manipulation. Jesus. Again, and this is $11 million after it also climbed back up. If it stood at 130, it probably would have been even more.
And market manipulation is not illegal at all, is it?
Yes, it is. Market manipulation is absolutely illegal. That's why a lot of these people are trying to investigate Wall Street bets for possibly manipulating the market by trying to encourage people to buy these stocks. Like, oh, you're encouraging people to buy these stocks because you own the stock. That's manipulation. That's illegal. In this instance, this is blatant market manipulation that is illegal. But what it is that these big companies who are manipulating the market are hedging their bets. Again, they're hedging their bets that what they are doing and the fines that they will accrue from it is cheaper than the amount of money they would lose if they didn't do something about it. Like they're basically saying it's okay if we end up paying a $2 million fee so long as we don't lose $70 billion, which, for the record, that is how much they've currently lost with all of this.
That's an insane amount of
money. They
money.
lost $70 billion going into Friday morning, and I believe, don't quote me on this, but I believe with GameStop finishing above $320 at market close yesterday, they lost another $11 billion on top of that.
Wow. I mean, no wonder why they're panicking so much.
They are. Like, this is something that can easily bankrupt Melvin Capital after a point.
But Robinhood is then bending the knee for them.
Yes, Robinhood is bending the knee for them, and that is because I believe 40% of Robinhood is owned by Citadel.
There we go.
The company, the hedge fund that is bailing out Melvin Capital. There is a clear conflict of interest here.
It's in their best interest.
It is in their best interest to ensure that they do not lose any more money, and because they have that much controlling interest in Robinhood, they can tell Robinhood, hey, cut it out, stop them, cut off the stream, shut it down. This is literally akin to losing at a video game, getting really mad that you're losing at that video game that you thought you were so good at, and turning the console off before the match is over. that is what this is.
It's like, whoop, no one won, no one lost.
Yeah, and the clear, blatant manipulation that's going on here is something that I've noticed that has been unifying everybody, regardless of political affiliation, regardless of wealth, regardless of even career. Like, you have musicians, politicians, investors, plumbers, whoever. Everyone is coming together to realize, hey, this is kind of malarkey. This is ridiculous. This is very illegal.
Yeah.
This is something that they did all throughout their careers for decades now, including, of course, 2008, which almost crashed the economy full stop and really ruined a lot of lives.
Right.
But now that it's happening to them, they're having an issue with it.
Yeah.
But, of course, we're talking about the financial stuff right now.
Yeah.
We have to go back to the tech stuff. Robinhood itself.
Yes.
And Robinhood was not done yet. So, Francisco, we can say that you found out about what was going on Thursday, because I remember you texting me about this, correct?
Yes, I did.
Yes, you texted me very much saying, did they actually do that? Yes, they did. I did not hear from you on Friday. Because the thing is, Robinhood was not done. So Robinhood, after getting put on blast that night by basically everybody, but more specifically on CNBC, I believe it was CNBC or CNN, where the one of the co-founders or co-CEOs of Robinhood actually got blasted by Chris Cuomo about this. They announced that they were going to reopen buying to a limited degree. You can buy a limited amount of stocks. So, say, for example, GameStop, you can buy 5 shares.
That's it?
5 shares, yeah. It's fine, whatever. It's still not something they should be doing. If someone wants to put down enough money for 4,500 shares of GameStop, they should be allowed to. But 5 share limit, fine. It's better than 0. It was 5 shares for GameStop, 25 for AMC, I believe, and then so on and so forth.
Mm-hmm.
Here's where things get really funky, though. The shares, the price for GameStop is going up. Over Friday, it is still going up and up and up again. And then Robinhood decides to suddenly change without notice. It decides to change the rules. Now you can only buy up to 2 GameStop shares. And of course, starts to dip a little bit again. And then it's starting to recover a little bit, and then Robinhood comes out and says, again, they don't even say these things. They just quietly implement it. Now they say you can only buy 1.
So they brought it back down.
And not only can you only buy 1, but it's not just, you can only buy 1 share today. It's you can only have 1 share, period.
You can only own 1.
Exactly, which means...
You have to sell the rest if you have...
No, it doesn't mean you have to sell the rest. Well, no, you don't have to sell the rest.
Okay.
What it means, though, is that, say, for example, you already invested in GameStop before and you have 10 shares in GameStop.
Okay.
I'm not talking about me. Let's say you have 10 shares in GameStop already.
Yeah.
And you wanted to buy more. With Robinhood's limit of 1, not only does that mean that you cannot buy that 1 share, but because you are over 1 already, they just block the purchase entirely. Meaning they're basically doing the exact same thing as they did on Thursday, but with slightly extra steps and a tiny little bit more leeway for other people. Same thing, they also prevented you from buying partial shares. Because Robinhood allows you to buy partial shares, which means, you don't let's say GameStop is $130. Mm-hmm. You don't want to put down $130, you want to put 10. Yeah. You could do that.
Yeah.
You could put down $10 and you'll have a partial share of GameStop.
Yeah.
About 0.08-ish would be at that point. Or we could just do 0.1 full stop for $13 of GameStop share, I guess, in that instance.
Okay.
But now they ensured that the only way you could buy GameStop shares, A, if you did not have any beforehand, and B, if you buy an entire one, which when GameStop shares maybe $320, a lot of people who are first starting out might not be able to swing that right away.
That's blatant manipulation there.
And of course, again, for someone who already invests in GameStop like me right now, I can't buy any more stocks there now because I have more than 1. So even though I'm trying to buy just 1, they're saying, no, you already have more than 1. You can't buy any. They also did this for other ones. I think AMC was dropped down to around 10 or 15. And again, if you're over that already, you can't buy anymore. Nokia, BlackBerry, same thing. Again, all the big stocks.
Right. That's ridiculous. Like, this is an insane level of corruption that is super blatant. It's very obvious that this is happening, but it feels like nothing is really going to be done about it.
Yeah, a lot of people are hoping that something happens, but a lot of the big wigs up there, the billionaires and stuff like that,
right,
they're calling for regulation now. Now that they're losing, they're calling for regulation. And so the overall consensus for this is that this is an unprecedented thing. This has never happened before. It's going to happen to a level that will never have happened before. And they are going to ensure that it never happens again. Because going back to the financial stuff, again, we're basically just finance summit today.
It's just an episode, yeah.
We're
but this is important because this is some crazy trauma.
We will tie this back to tech, I swear.
Yeah.
I mean, in some ways, this is all kind of related to tech anyway. Because A, again, GameStop.
Yeah.
But B, people don't really trade paper stuff on the stock market anymore.
Mm-hmm.
It's not like you see in like a lot of those cartoons back in the day, or like in the stock market images back in the Great Depression or whatever, where you have people running around with papers and stuff. No, most of this stuff is done on computers. A lot of it done at home, straight up.
Yeah.
Like you don't really have to show up in Wall Street itself necessarily for a lot of these things.
Yeah, right. Like it's just, a lot of people do like live streams and stuff like that.
Exactly.
And they go, hey, it looks like I have a strong feeling that this stock is going to go up within the next few minutes or the next few hours.
Exactly.
Yeah.
So this is all tech oriented, just not the kind of tech that we usually talk about on here.
Right, yeah. And this is still very much relevant because this is something that went down just this week.
Exactly.
Yeah, like while we were like thinking about topics and stuff to talk about on the Tech Summit podcast. And this in and of itself is just a pretty big topic.
This has been the dominating news for the entire week.
Yeah.
And also just in general for tech, it's actually been a pretty slow week, hasn't it?
Yeah, I would certainly say so. There hasn't really been much innovation so far. For this week, though, I'm pretty sure that next week we could start seeing stuff since February is going to start breaking in.
Exactly.
Yeah.
But so back to the shorting stuff, because that's where it's all tying back with all this panic.
Yes.
The big thing is, of course, again, the price is going higher and higher and higher. We're talking about 2 weeks ago, it was about $34 for a share. Right now, I can double check it myself, but I believe it was $314.
That's crazy.
314. So the more it goes up, again, the worse that those shorts end up looking. Because say, for example, we'll say Melvin Capital. I don't know if I remember the exact number. I didn't see an exact number, but let's say Melvin Capital was betting on GameStop going down to $20.
Yeah.
Like Citron did.
Yeah.
The higher it goes, the worse it gets for them because, when that short expires, they have to buy that stock back. The way that a short works in the thing is that you buy and immediately sell the stock at that price. You wait for it to go back down, and if it goes back down, then you can buy that share back at a cheaper price and then pocket what you got when you return the stock back to the original place you got it from.
Right.
Now we're talking about a situation where they bought and sold the stock at a certain price, $34 maybe. We'll say $34. But now, when the short is coming in, wait a second, it's $314. You got to buy that stock back now. You got to buy that stock back.
So they're making you pay up the $314.
You got to pay up to make up all that difference now, and that's going to cost you. It's going to cost you a lot, especially because in a lot of these instances, the places where you're often selling these stocks out to people and then have to buy them back is the retail investors on the market. So you and me.
I'm going to ask this blatantly. Do you think that Robinhood is going to die from this whole controversy?
Most people say it is. I've seen a lot of people who are saying that once this is all over and, they, sell their GameStop stocks or whatever it may be, they are going to move their entire portfolio to another site and delete their Robinhood and cash out and all that stuff. So this could very well actually be the end of Robinhood as we know it after all these years, which is unfortunate because, and this is the way that one analyst put it, Robinhood is the Facebook of investing in the sense of that it's extremely easy, very streamlined, a lot more accessible for a lot of people. You have a bunch of other investment apps and sites, your Fidelities, your Weebles, TD Ameritrade, all that stuff. But those are going to usually require more knowledge. They're going to require a little bit more knowledge and understanding of how the market works. Plus, some of these do charge commission fees. One of the big things that Robinhood marketed itself on when it first came into the market is that it has 0% commission fees. You're not paying a broker to do this stuff for you. You're not paying a fee or anything like that. Whatever you make on the market, whenever you cash it out, it is yours. The only thing you have to worry about, of course, is taxes later on with the IRS.
Right, of course.
Which, of course, that should be the thing. If anyone here on the Tech Summit podcast or in the viewership or listenership, I guess, if anyone is actually invested in GameStop and they intend to cash out at some point, please, please, please do not spend it all in one place because the IRS will be after you next year depending on how much you make out with this.
Wow.
They will be, possibly up to a third.
Wow. Okay.
That is just how it is. So yeah, Robinhood itself could actually be a done deal as a brand. The problem is Robinhood wasn't the only one who got caught with this stuff this past Thursday.
Tell me more.
Webull, TD Ameritrade, a lot of these other investment apps also stopped allowing people from buying these stocks. Most places, you were not able to buy these stocks. That's why the value plummeted as hard as it did. Robinhood was the most notable one, again, because the most accessible one is the one that everyone was looking at, especially when they first started getting in there.
Right.
It's the easiest one to sign up for. It's the easiest one to work with.
And
of course, you have the referral stuff. I referred you at one point.
Right. And it was very recently, like 2 weeks ago.
Yeah. So while Robinhood got most of the attention, a lot of these other apps also blocked buying these things. You could sell, you could liquidate, but you cannot invest further. A lot of these apps did this. The difference is that after a while, towards the end of the market day, TD Ameritrade reopened again. Webull reopened again. A couple of them reopened. A lot of them stood closed, and Robinhood stood right where it was saying no. And even this past Friday, with Robinhood instituting that limit that is basically a workaround to blocking you from buying again, yeah, TD Ameritrade was in fact actually allowing you to buy still.
Okay.
That's actually how my friend got in. They couldn't do Robinhood because Robinhood was also keeping them in approval limbo. They're still in approval limbo. But they were able to get into TD Ameritrade and they were able to get their one share of GameStop.
Okay, that's good. At least you got something from GameStop, and that's still worth quite a bit.
And, but yeah, Robinhood is the most noticeable when it comes to this stuff because Robinhood was the most accessible one. Robinhood has also been the most played one. Another thing I just mentioned that we forgot to mention, Robinhood on Thursday also delisted these stocks from being searched. Like if you went to the search bar and you typed in GME or GameStop, you wouldn't find anything. The only way you could get to that stock was to go into the top 100 most popular ones and find it in the list there.
That's insane.
Actually searching for these stocks, no, you couldn't do it.
This is absolutely egregious.
It's extremely egregious.
Yeah, this, I don't understand how anybody can actually go back to Robinhood or a lot of these apps that partook in this. Just considering what they did, you can't really trust these applications after what they did because they're clearly against you. They don't care if they're actually taking money away from you. They're trying to please the people above them first and foremost, which, while understandable, also goes against the whole name of Robinhood.
It's supposed to be a free market. It's supposed to be, again, giving, the whole tenet of Robinhood, steal from the rich, give to the poor.
Yeah.
We're not even necessarily trying to steal from the rich, although the fact that the rich are bleeding money from this, a lot of people aren't complaining about that.
Right, yeah. It's just more so like an opportunity for those who aren't rich to actually make some income from this.
Exactly. You do have some people on Wall Street Bets, the subreddit, again, chaotic, very wild and free. You actually have some people who have actually promised to continue to hold on to GameStop even when the value plummets down to zero. Because as long as it bleeds the billionaires. There are people that are like that. I imagine most people are just waiting for it to go even higher before they can sell out and profit.
Yeah, right.
That's just how it is.
I mean, that's personally what I would want to do, though I don't have any GameStop shares, unfortunately.
Yeah, exactly, yes. Again, we are not financial advisors. We are not trying to manipulate the market. We are not trying to advise anyone on what to do here. We're simply saying what it is.
Yeah.
Full disclosure, he does not have GameStop stock. I do.
Right.
All right, that's just nature of the beast.
Yeah, so he's just speaking from tons of experience and more so just listening and learning as well.
Yeah, I've just been kind of watching this like a hawk for the entire week as has been going on. And, even if you aren't invested in GameStop, certain things like what Robinhood's been doing is something that should really be raising some eyebrows and oh, that's not good. Especially because, again, something that we've all kind of forgotten about, because we're talking about all this stuff. We're talking about the stocks going up. We're talking about the shorts. We're talking about the short squeeze. We're talking about the billionaires and stuff like that. And Melvin Capital. We're talking about GameStop and all that. That's the thing. We all forgot who is at the center of all this. GameStop.
Yeah.
The company, GameStop, a company that I imagine for a lot of people who are listening here has actually been integral in their lives as people who play video games. And a company that, whether we agree or disagree with certain things, like, say, for example, their circle of life practices with their employees, is still a relatively integral thing that, isn't exactly something that's super positive. It goes away, especially given some of the new stuff that they're trying to do.
Yes, and I would argue that that's a good reason why GameStop stock could be going up, but it's definitely not the only reason. Like, you do have Wall Street Bets on Reddit, right? Now, one of those things is going to be, the fact that they have Reggie, former CEO of Nintendo of America,
on
now
the board of directors, right?
Exactly.
Similarly, a big reason why this started to really start to go up, the reason why Wall Street Bets started to turn their attention to GameStop to begin with, is because another person who recently joined the board of directors is Ryan Cohen, who founded the company Chewy. I believe that's for pet supplies and pet delivery and stuff like that.
Yeah, isn't that for like dog food?
Something like that, yeah. Chewy.
Huh.
Chewy, which was a startup with zero money whatsoever, that ended up blowing up, becoming a notable brand, and then being purchased by Amazon.
I see.
People who invested in Chewy early on made out like bandits as a result. So Wall Street Bets has a lot of faith in Ryan Cohen. So when you hear that Ryan Cohen is now on the board of directors for GameStop, and then you hear him say that he wants to turn GameStop from the Sears of games, which is a failing company,
Yeah.
to the Amazon of games, which is, richest man in the world up until recently, which has a whole other stock thing on its own thing. But what's it called? But yeah, all that, suddenly people have faith and they think, all right, let's take a gamble on GameStop. And that's when things started to really get rolling.
Yeah.
So yeah, we're talking about that. But one of the big things that GameStop is trying to implement is that they're trying to move into the PC gaming market.
Right. And in fact, if you go on GameStop's website, you will be able to find that they, at the very least, have listed graphics cards.
They have components.
Yeah, that we actually saw. And not only that, but we have also heard of them possibly starting to implement PC building stations, which is a pretty big deal for me. Now, right now, obviously, that's going to be pretty difficult to implement in a lot of stores because a lot of stores are pretty tiny.
Mm-hmm.
But I'm sure that they could probably make that work. Like I would have expected something like this to be more of a thing in something like a Best Buy, for instance.
Right.
Yeah, and while it is a thing at Micro Center, correct?
What, PC building stations?
Yeah.
Yeah. They usually have like an entire corner dedicated to PC parts and like buying things for building PCs.
Okay, and people can actually build their PCs there at the store?
I believe you can pay them to do so, yes.
But can you do it
Oh, I don't know about that.
as a buy? Okay.
I've not done that myself. Both times that I've bought parts at Micro Center, I usually go back home and then we build it there. Of course, you've recorded that.
Yeah.
You recorded the building process at one point.
Yes, I was the architect of that.
So I don't know if you can I don't know if it's like a little desk being like, here you go, build your computer right here. I don't know about that. But
see, that's actually what I had in mind. I thought that they were just going to like let you buy parts and then let you build it there and like test it there.
I feel like more than anything, what you would probably be doing is you can buy the parts, and then if you want, you can optionally pay an extra fee, and then they build it for you right there and then.
Okay. I mean, as long as it's not too bad.
I don't think it's an extremely high price. Anyway, but
yeah,
it's definitely something. It's definitely something to keep looking forward to and noting. It's like, so that's the thing. GameStop can in fact be saved. It can go up in price. It's just that the big, weird, confusing thing that's got everyone a buzz is the fact that it's gone up, A, this quickly, B, this high. Because we're talking it's $314, right?
Yeah.
The big meme that they were all looking at as a joke was $420.69 because, of course, it's Reddit.
Yeah.
But the weird thing is that these hedge funds who invested money on shorting GameStop and betting on it losing and failing, they didn't back out when they saw that the price was going up. They doubled down. They put even more money in it, which means they have so many shorts that in the case of Melvin Capital, when the time comes for them to finally give up and say, fine, we'll buy it back, it could take them days to do that. Of course, days and days and days of them buying stocks from people, which means you sell a stock, that means the value goes way up. Mm-hmm. Some people are theorizing it can hit $1,000. Others are saying it can reach 5, 10. One person pointed out that so far this all tracking is very similar to Volkswagen in 2008 and how Volkswagen skyrocketed because of a short squeeze and became the most valuable company in the world. And for it to be fully equivalent to Volkswagen's explosion in 2008, GameStop would have to reach $35,000 per share.
Okay.
Like some people are even theorizing that with this squeeze and with them buying all these shorts, the price could technically rise infinitely if people are holding, not selling back. If they are holding, because they have to try and buy it back, no one is selling it back to them, which means the price would go up infinitely.
I see.
Theoretically.
Yes.
Theoretically.
Now, I do want to say that I did not have any faith whatsoever that GameStop stock would end up going as high as it did.
Right.
And it even went past that $420 with 69 cents, a threshold that Reddit
It
was
did
setting.
a couple times, yes.
Yes. So if it can make it to that point, like if it could go up that high, it could very well actually get to 1,000 at one point, and even way higher than that.
Theoretically.
Yeah, theoretically. But now even I'm starting to see that potential is actually there.
It is very much there. It's also very much dependent on people not selling all at once or starting to panic if it starts to dip a little bit.
Right. So
like a lot of the trouble has been trying to theorize when exactly is the peak going to show up. Like you're going to have a lot of people who might see that it reaches past $1,000 and think this is the peak, get out now, but then in reality it keeps going further up. It could keep going further up if they held,
Yeah. It could very well be the case.
So, GameStop is a company that's worth investing in, or at least, it's a company that can, in fact, be saved, and, of course, is tech-related to us.
It's worth investing in if you can, of course.
And, of course, there's also AMC, which is also tech-adjacent in the sense that it's a lot about movie tech, projection tech, tech-adjacent. AMC, that's also been exploding a little bit, too, because of the memes and stuff like that. AMC is something I think is actually more long-term, because a lot of people are itching to go back to the movie theaters. When the Godzilla vs. Kong trailer dropped, a lot of people were saying, this is something that we need to see in theaters, not on a TV screen or not on a phone. And the same time as that trailer dropped, AMC actually did get a $975 million bailout to save them. And, so AMC is something that's more long-term, especially when things are able to reopen from these uncertain times.
Yeah. And I do very much hope that ends up being the case, because I do want the economy to just be able to fully open, and having movie theaters open, especially here in New York, would be a pretty big deal.
And of course, with AMC, once again, we're talking about thousands of jobs that are saved from this.
Yeah.
Thousands of jobs. Like someone pointed out, with all of the investing that's been going on in AMC was about $2 or $3 last week and has gone up to, I think currently right now, $13. Which isn't as big of a deal as GameStop, of course. It's not going to be as skyrocketing as GameStop currently is right now, because GameStop's in a squeeze.
It is still a sign.
But that alone actually helped wipe away all of AMC's $600 million debt. AMC is no longer in the deep trouble that it was when everything started to go down this past March, last year and stuff like that.
Right.
Like, AMC could actually reasonably be saved because of all this stuff going on. And again, that saves people's jobs.
Yeah.
And that can only be seen as a good thing in this instance.
Right. Yeah. It's something I would very much love to see.
So, this is very much a very direct class warfare, I suppose. Again, it's very much like the little guy versus the big billionaires. And the big billionaires are trying to bet on people losing their jobs, essentially, is basically what the workaround comes down to.
Yeah.
And so a lot of people don't want that, and out of principle are trying to fight against it.
Yeah.
And, that's a whole tech thing right there.
And it is an admirable battle, I would say. It is one worth fighting, I think.
It very much is. It's a very interesting thing. And, again, we're not going to see anything like this ever again, because more than likely there are going to be regulations that sort of stop it from ever happening.
Yes.
Ever again.
Yeah. Whether it's to our detriment and their benefit or the other way around.
Right.
But we'll have to see.
Exactly.
It is unlikely that the billionaires will end up losing. Considering what the preferential treatment around here is.
They will lose money, but probably get bailed out.
Yes.
Is what it is.
Yeah, and that often it just happens too often, in my opinion.
Yeah.
But with that said.
Of course.
Yes.
Now, there is, of course, a lot of tech stuff that's going on with a lot of this stuff. Same thing. Again, another company that has been exploding recently that we didn't talk about too much was Tesla. And all of its technology. They actually recently introduced some new stuff, but we're going to have to save that for another time.
Yes. I also invested into Netflix, actually.
You invested into Netflix,
nice.
really?
Yes. Yeah, but I always get notifications saying it went down.
Netflix is very much a long-term one that's going to go up over time.
Yeah.
But yes, of course, if you guys are watching here on YouTube, we have that social media right at the bottom of the video.
And, well, I mean, that's been pretty much it.
Hey, if you're watching on the other platforms, all the stuff is in the descriptions of the respective platforms as well.
Yeah. So with that said, thank you so much for watching / listening, especially listening, and have a wonderful night until next episode.
Good night. Travel well. See you guys on the moon.